guys, welcome back. It's Josh with the Financial Advisor Car Guy. So this week I wanted to chat with you a little bit about giving you an update on interest rates and what that looks like as far as inflation goes to the car market and to the world around us. Just yesterday, the Feds raised rates another 0.75% or 75 basis points. And so today when I got to work, I looked at 1-year CD yields. And you might ask, what's a yield? A yield is just a fancy word for percentage. So a CD yield is the same thing as a CD percentage. Now, if I put money into a CD for 1 year, the yield or the interest I earn approximately as of today is 4% at my institution. If I were to go to any local bank, any bank in town, a 1-year CD is at 2% or less. So we broker CDs from all over the United States, in some cases even outside the United States, but we broker CDs and are able to get the best rates around. So 4.05 is the best rate I was able to find on a 1-year CD. And for cash or cash equivalents, a money market is going to be your best approach. Our money market is currently paying 2.31%, whereas again, the local banks are paying 0.5% or less. In fact, most of them are at about 0.25%, 0.2 to 0.3 is really the average price for a money market right now. So even there, we're paying about 2% higher than any local competitor. What that means for you, basically, money is getting more expensive. And what I mean by that is when you invest your money into a safe savings account, let's call it an account, you can earn 2, 3, 4, 5% fixed, meaning there's little to no risk. It's more, I don't want to use the word guaranteed, but it's more likely to just grow with interest and occasional dividends or whatever the case is, as opposed to investing it into the market where there is an opportunity for it to lose value or devalue. Even if you're earning interest and dividends, the underlying asset itself, so call it common stock, might be going down in value. What that ends up doing to everything is things just cost more. If I were to go buy a new car today, interest rates are higher. If I were to go buy a new house today, interest rates are higher. If I'm going to finance anything or put something on a credit card or do anything of the sort where I'm borrowing, it's getting to be more expensive. Now, on the flip side of that, the positive side of that is people who pay cash for things are not affected. In fact, they actually benefit from rising rates because if they have cash in the bank, they can put it into a vehicle that's going to now pay them 2 or 3 or 4%. Whereas a couple of years ago, it was probably paying 0 or 0.01 and it didn't pay to have cash. Everything when rates are low, it makes sense to finance. Keep your cash on hand or invest it and earn, hopefully, a long-term average rate greater than the cost of the interest. So I'll use my R8 as the example. That car I did finance at 2.49%. I put $0 down and the interest is cheap. It's very cheap because the money that I could have put down on the car, I left invested in the market. Now, well, a year and a quarter ago, right? I don't know how many months ago, 16 months ago or something like that. I didn't know that here we are today with the market being sub 30,000 on the Dow. The way the market had been going, my money may have been making 12% a year. So if it only costs me 2.5% to borrow, why would I sell some investments that are making 10% or more to pay on a loan that would only cost me 2%? So it doesn't make a lot of sense. When money's cheap, it does make sense to finance. But when money gets expensive, like today, if I were to go buy a new car, I'm probably looking at 5 or 6%, maybe even 7% if I have mediocre credit. Houses are the same way. They're all in the 5s or low 6% range. What else? Credit cards are 18 to 25% or more if you've got really crappy credit. There's just so many variables when it comes to borrowing that it's beneficial to pay cash if and when you and where you can. So I just wanted to kind of touch base on that because, the car market has kind of slowed down. I think there's still a little bit of supply shortage, so you're still not seeing as many new cars on the lots as you were. But because the rates have been rising and the cost of new cars has risen, I think used car lots especially are starting to see a buildup of inventory because they paid a premium to buy that used car to have on their lot. And now their consumers are going to have to pay extra in interest, which may make the payment out of their reach. A payment that may have been $300 might now be $350, or a payment that was going to be $500 now might be $600. And so every extra dollar that you're paying in interest really matters. 2% for a car loan is not something you can get easily anymore, if at all. Even 3 or 4% is going to be incredibly hard to come by. So, if you've got a 2 or 3% rate, maybe don't worry about paying it off. I mean, make your monthly payments, but don't feel rushed to paying it off. Even now, if I moved all my investments into a fixed 4% CD, I'm still paying 2.5% interest on the car loan, but I'm netting 1.5% because my money's working for me at 4%. So I'm still making 1.5%, and that's in a weird environment because there's no risk in a 4% CD. Hopefully that all makes sense. It's been a very common conversation. I've had this conversation several times this week with clients. We knew that Fed hike was coming. We didn't know what it was going to be. I read a couple places where it could have been as big as 1%. 0.75% was kind of the expectation. But of course, the market has responded negatively to that. I think people are getting afraid and thinking that the Feds are overstepping their bounds and trying to intervene in a positive way, but maybe it's not working that way. Inflation is likely to reach double digits. I think the next report that comes out, I wouldn't be shocked if we saw inflation at 9.5 or 10%. The world we're living in is just a mess. And so, looking at it economically, cash is always going to remain king. I definitely think that if you've got it, sit on it. There are some opportunities in the market, and those opportunities are good. I think that in the short term, those opportunities aren't going to leave. I really don't know that the market's going to turn around and start climbing tomorrow. But all that to say, I don't necessarily think it's going to continue to crash as hard as it felt this last couple of weeks. The market went from almost 32,000 down to 29 in a pretty quick few days. So pay attention to that stuff. If you have questions, comments, let me know. Comment down below, send me an email. But like this stuff, share it. Hopefully we can get the word out. We can start talking a little bit deeper on the investment side. I've kept this channel primarily automotive, but you guys have to realize that my day job is an investor. And so as a financial advisor, I spend a lot of time looking at interest rates. I spend a lot of time looking at stocks and bonds and municipal bonds and money markets and mutual funds and dividend paying holdings and all of the things. And I've used this channel as a little bit of an outlet for my car knowledge and for my car curiosities and all of those things. And I want to share that stuff with you guys too. But when there's a lot of economic issues going on in the world, that is my day job. And so to me, that stuff's just as important to share with you guys because you need to know it. You need to hear it. You need to understand what's going on. I think there's nothing more frustrating to me as a financial professional than when someone comes to me who's had their head in the sand and says, please explain the economy. Not because I don't want to explain the economy, but because it's not that simple, right? There's a lot of moving parts. We've got international conflict. We've got domestic conflict. We've got political problems. We've got, inflation. We've got interest rates. We've got the Feds trying to intervene. And that's just the tip of the iceberg. So all that to say, there's a lot of moving parts in this stuff. There's a lot of problems and things happening in the world. And so again, the car side of things has been sort of my outlet, and that kind of takes my mind off of what I deal with every day at work. But this stuff was important enough, and so I wanted to share it with you. But, comment down below, like, share. But mostly remember, may every investment you make be a good one. Till next time.